Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1755 AN. Today's date is January 2nd, 2018, and the title of the episode is The Central Banks Expose Growth Slowing Global Economic Disaster. Now, before we get started, I wanted to talk about the stock market. Many investors take their eye off the ball over the holidays. We've watched the market move up and down. It looks like it's completely chaotic. Take a look at the S&P 500. It has fallen by 12% since December 3rd. That's from 2,790 to 2,460. As of Christmas week, the Dow Jones has entered the bear territory. So you need to watch the markets. Whenever the stock market is falling, precious metals, especially gold, start to rise. If you take a look at the S&P 500 compared to gold, you can see the S&P 500 is declining as gold is rising. Now, don't wait until this gets worse. Start a gold IRA or 401k today, and you'll get a tax break and growth of 3% over the same period. That's 36% annualized. All you need to do is call Noble Gold Consultants at 877-646-5347 or click the link below and fill out the form to receive the free gold and silver investment guide. Let's get into the economic collapse financial news. Now, the central bankers, their backs are against the wall. They've been trying to gain control of the narrative. And what is happening here is they're losing control of the narrative. We know that Trump, he has the magic wand. We know that he has the ability to manipulate, just like the central bank, just like the deep state. And he's using all of this to his advantage to keep the economic system going for a little bit longer, while in the background, he prepares the United States for the transition. Actually, I do believe he's working with Putin, working with Xi Jinping to bring down the Rothschild central banking system. And we know that the IMF, we know that the central banks and certain financial pundits are out there saying that the growth around the world is slowing because of tariffs. Well, the central banks, they were exposed. And the information coming out of the World Bank shows that the slowing growth has nothing to do with tariffs, with Trump's policies. It has to do with debt. And we'll be talking about that in just a minute. But first, I wanted to start off with Sears. As we know that many retail chains, they have been shutting down, declaring bankruptcy, and we're starting to see that this is starting to spread big time. Of course, as we know, the FICO scores have been changed. A lot of people use debt to pay for the holiday season. Of course, those bills are going to come due. And remember, the central banks, they had brainwashed the entire world population into thinking that debt is a good thing. And if you are in debt, well, that's great. But if you can't pay debt, you're a bad person. And they've done this over time to make you believe that you owe them something. But we owe them nothing. We need to understand that the central bank system, their entire system, is about control, putting fear into people. And this is what they've done for a very long time. But that's about to end. Now, as we said, Sears, they're closing about 80 more stores across the U.S. in early 2019. They closed about 140 stores back in October, and they declared Chapter 11 bankruptcy. And we can see that they might not be operational for much, much longer. Just like many other stores, they're just completely closing down left and right. Now remember, the American people, their wages really haven't gone up. People have lost their high-paying jobs. Manufacturing has been moved out of the United States. Yes, Trump is trying to get it slowly brought back to the United States, but this is going to take some time. And people, most of the population, have low-paying or part-time jobs. And I'm talking about the bulk of the middle class. As we can see, manufacturing, well, it is declining right now. It's going to take some time for Trump to bring the manufacturing base back to the United States. Remember, he's only been in office for 2 years. The deep state, the central banks, they've had since 1913 to move everything out of the country. And of course, it accelerated right after World War II, and then it really accelerated in the 70s. And this is when they started to prepare everything to change what we have today. But Trump is using everything the deep state and the central banks have used in the past to keep the economy moving along. If we go back to when Obama was president, he had Saudi Arabia push out as much oil as possible to bring down the gas prices. Now, there were two agendas associated with this. One, to allow the American people to have more currency in their pocket to keep the economy operational. They wanted the American people to go spend the money in retail. Really didn't happen. Actually, what happened was people said, wow, I have extra money in my pocket. Now I can pay for extra food. Now I can make my rent payment. And that's what happened during that period of time. The other agenda is they were turning the screws on Russia, and they were trying to hurt Russia's economy. The plan back then was to have war with Russia. And they were hoping that by pushing out more and more oil, because we know that Russia exports oil, it would hurt their economy. But remember, Putin took over the central bank. Putin called the shots. They paid off their debts, and they were able to weather the storm. And that agenda did not work. And this was all being prepared for right now. So Obama, he used the gas prices and lowered them to try to force the American people to go out and spend their money. Trump right now tweeted out, "Do you think it's just luck that gas prices are so low and falling? Low gas prices are like another tax cut." He's using the same exact strategy that the deep state and the central bankers have been using. How do you allow the American people to continue on? You lower the gas prices. It puts more money into their wallet. Does this mean they're going to spend it on retail? Most likely not. It will allow them to survive a little bit longer. Trump needs the economy moving along, staying afloat long enough for him to complete the transition. And they're working on this in the background. Now, what's very interesting is that the corporate media, the central bank around the world, the IMF, the BIZ, they're continually out there telling us that the global growth is declining. And it's because of the tariffs. And they keep mentioning the tariffs over and over and over again. But a study by the World Bank found that if the debt to GDP ratio exceeds 77% for an extended period of time, it slows economic growth. Every percentage point of debt above this level costs the country 1.7% in economic growth. It's even worse for emerging markets. And there is a tipping point. Now, if we go to the World Bank's page and we look at what they said, this is what they said. Public debt has surged during the current global economic crisis and is expected to increase further. This development has raised concerns whether the public debt is starting to hit levels where it might negatively affect economic growth. Does such a tipping point in public debt exist? How severe would the impact of public debt be on growth beyond the threshold? What happens if debt stays above this threshold for an extended period of time? The present study addresses these questions with the help of threshold estimations based on yearly dataset of 101 developing and developed economies spanning a time period from 1980 to 2008. The estimations established a threshold of 77% public debt to GDP ratio. If debt is above this threshold, each additional percentage point of debt costs 0.017 percentage point of annual real growth. If you look around the world, a lot of countries have a very high percentage public debt to GDP ratio. And if you look at many different nations around the world, Japan, they have a 228% GDP debt to GDP ratio. If you look at the United States, it's 100% debt to GDP ratio. And this tells us something. This tells us that the central bank system, they are the ones who are responsible for the economic slowdown. It's not the tariffs. It's not Trump's policies. It's actually the central bank system. Now, we need to remember, Q has told us with post 2619 that gold is going to bring down the Fed. Actually, gold shall destroy the Fed. And if we go back in time, and we've mentioned this before, Trump has mentioned that he really likes gold. Trump said, we used to have a very, very solid country because it was based on a gold standard. And he said this while he was doing an interview on WMUR in New Hampshire. He also said in GQ, bringing back the gold standard would be very hard to do, but boy, would it be wonderful. We'd have a standard on which to base our money. And what would happen if we brought back the gold standard? We would see prosperity. It would destroy the Federal Reserve. That is where we are headed. The central bank right now, under their debt level, under their debt, their weight of all their debt, it is destroying the global economies. They knew this. They knew that this was going to happen. Remember, Trump was never supposed to win. Clinton was never supposed to lose. And they had this all planned out. They had the events planned out. They had everything ready to go. But we are now entering a completely new phase, a completely different picture on what they planned on. They planned on moving the system. The plan now is to destroy their system. That is where we are headed. So are we going to be going through a transition? Absolutely. We have to transition out of this central bank system into a brand new system. And everything that we see, all these different indicators with Andrew Jackson hanging on the wall, Q telling us about gold, Trump, as he was campaigning, talking about gold, contradicting the Fed, saying the Fed is to blame. This is not a coincidence. This is happening on purpose. They're preparing the nation. They're preparing for what is to come. And that is a great economic transition out of the central bank and into a stable system that has confidence behind it. How do you do that? You introduce gold. And that is where we are headed. So we're headed towards a system that is going to be based on something. It's not going to be based on the full faith and credit of the United States. It's not going to be based on the Federal Reserve piece of paper that's backed by oil. They're moving away from all of this. And once we do, we're going to see a very big change. We're going to see the real value of gold, the real value of the Federal Reserve note, and the Federal Reserve note is going to be zero. Gold is going to shoot up like crazy. Silver is going to shoot up like crazy. And the world is going to have to readjust. And that is what is coming. So get ready, get prepared for this. So get ready, get prepared. 2019 is going to be incredible.